Welcome to our transfer pricing podcast, Next Level. My name is Henning Straeter, partner and head of transfer pricing at Nexia in Germany. Together with our colleagues from Germany and abroad, we will discuss about very interesting transfer pricing topics which could be interesting for you and for our clients.
Hello, my name is Alona Orel and I am Senior Associate in the Transfer Pricing team at Nexia Germany. I'm very excited to discuss the latest transfer pricing developments together with my international Nexia colleagues in this podcast.
Hello, I'm Dawn Ross and I lead the transfer pricing practice here at Saffery in the UK, and I'm going to be answering some questions from our colleagues in Nexia Germany on UK transfer pricing reform.
Thank you, Ron. Thank you very much. And it's great that you joined the podcast today. I would like to ask you a short question. What changes do you expect to see in your country, in the UK, with regard to transfer pricing and international tax law by 2026?
Thank you, Henning. Following a consultation process in the spring of 2025, the government has published legislation to reform aspects of UK transfer pricing for accounting periods commencing on or after 1st of January 2026. And also, and most importantly, a new transfer pricing filing requirement, which will fall in for accounting periods commencing on or after 1st of January 2027.
That is very interesting. Thank you.
Perhaps the most important change that will affect UK enterprises within transfer pricing the most is the introduction of the International Controlled Transaction Schedule, ICTS, which will be filed annually as part of the UK entity's annual corporate tax return for accounting periods commencing on or after 1st of January 2027. Although further consultation on its format is expected in spring 2026, it's our view that enterprises within transfer pricing may possibly struggle to complete this return without having in place a transfer pricing master file and local file, which are mandatory for those entities in CBCR, and is also recommended as best practice by HMRC for all other entities within TP. So basically, if you haven't got your transfer pricing documentation in place, I think it will be very difficult for entities to complete this return.
Thank you, Dawn. From a transfer pricing risk management perspective, what proactive steps should companies take in response to the new regulatory environment?
Basically, I think that companies need to be talking to their transfer pricing advisors as soon as possible to actually find out what the new reforms to transfer pricing in the UK are all about, because there are various other reforms, some of them which are quite small, and I think it's really important for entities to actually understand what they all are and which ones actually apply to them. There's also been another simplification in that, and this has been very, very well received, in that UK transactions are now exempt from UK transfer pricing unless there is a tax loss risk. And this starts for accounting periods commencing on or after 1st of January 2026. Another point is we retain the SME exemption in the UK, and the consultation in the spring did consult on removing that, but that now will be retained, and it will mean that the SMEs will not need to submit an ICTS return. And there are various other small changes, as well as alignment of the UK PE definition and attribution rules with the 2017 OECD model. So it's important to be talking to your transfer pricing advisor as soon as possible. Other reforms came in on budget day on the 26th of November 2025 on transfer pricing, and the lesser reforms, dare I say it, are reforms to the participation condition and bringing in the concept of common management to bring enterprises within the transfer pricing legislation, but that is only perhaps relevant in limited structures. Changes to the intangible fixed assets rules in the Corporation Taxes Act 2009, which bring in the use of arm's length pricing in regard to intangible asset transfers. changes to financial transactions, which is all around clarifying the treatment of implicit support and explicit guarantees, and repealing diverted profits tax, which will be replaced by unassessed transfer pricing profits. So diverted profits tax will be brought within the transfer pricing legislation, which is great for businesses because it allows treaty benefits and MAP claims under the corporation tax regime. So there's a lot going on in UK transfer pricing at the moment.
Thank you.
Thank you very much, Dawn. That was very informative, and I think it makes sense that our audience here on this podcast will get in direct contact with you. If you agree, of course, and at the end of this podcast, we will mention your contact data, and I would like to thank you very much. Please keep in mind that we will have a series about the transfer pricing development 25-26, and we would be happy if you will join our series as well. Thank you very much.
Thank you, Henning and Alona.
Thank you. That was the Transfer Pricing Podcast Next Level. Thank you that you joined this podcast series. We would be happy if you will follow this channel and join the next Transfer Pricing podcast as soon as possible. Thank you very much.